Hello and good afternoon. Welcome to HYCM's FX Week Ahead live market analysis with myself, Giles Coughlin. Now, let me just check that the main screen is showing. I seem to have a issue here, so let's just. Yes, okay. I'm just going to adjust the setting, and that should allow the. Yes, there we go. And that should allow. Yeah, that's great. Thank you very much. Then that is a change I've just updated my computer, and very frustratingly I had to change lots of settings and passwords, and that's why I couldn't see the screen. But you should be able to see my screen now, and it should be all attending. So hi Chris, Ignatius, Lolu, welcome to the FX Week Ahead. Just before we start, I just want to make it clear that any sort of trade situations, currency pairs we're talking about today, we're not providing a signal service. The whole idea of this webinar that HYCM provide is that it's all about education. It's all about understanding how I, as a professional trader, go about understanding the market and market moves, and where I'm expecting buyers and sellers and currency pairs. But what it isn't is it isn't a signal service, and it can't be, simply because the market dynamics are constantly changing. So the idea is when you look over my shoulder, you see the kind of decisions process that I'm making. So that informs you guys how to make trading decisions for yourselves. And of course, this particular webinar is we're looking to the week ahead. So we're trying to see any particular events that are of particular interest for us going forward. So without further ado, we're going to get stuck in. And of course, we've got quite an interesting week because there's been two big trade deals that have had very promising signs in the last 2 or 3 days. And the first deal that we saw a very positive sign on was the Brexit negotiations. Now, I'm just going to pull up a pound dollar pair. I'm just going to show you what we've been seeing here in the pound dollar. Now, in the pound dollar, from Thursday of last week, there was news that Boris Johnson and the Irish Prime Minister Varadkar was making progress on a trade deal, and all of a sudden, out of pretty much nowhere, a trade deal was seen as possible. Then we had 2 days, Thursday and Friday last week, of strong pound buying. Pound moved up through this key overhead resistance at 1.2500 and hit resistance at the 200 exponential moving average, and then prices sold off from the 1.2700 handle. We're now just above the 1.2500 level, which is key support. You can see here, resistance here, now key support there, and the market's deciding whether it's going to come on down. But where are we now with that trade? Now, the situation we're in at the moment is that the EU have got some concerns and details that need to be ironed out. Boris Johnson has the difficulty of trying to get the Northern Irish Party, the DUP, to agree to this sort of essentially a compromise deal. So from here, I'm not expecting to see any further pound strength without a fresh catalyst. We need something fresh, something new, some renewed optimism. That's why this morning we've seen, I was selling the pound, and the reason I was selling the pound, if you get onto the smaller chart, is that there's some profit taking into the end of last week, and then as the market opened this morning for the London session, there was general pessimism in the market that, the optimism about a deal, it may be trickier. The EU were wanting some more compromises for the UK to make. It's dawning on the market that actually this is hard, the time is running out. So unless we get a fresh catalyst, I'm not expecting to see any pound buyers, and the market probabilities at the moment are still pricing in. The most probability is of an extension. So remember, a Brexit extension will be pound positive. We would find buyers if an extension is announced. But the market is less optimistic about a Brexit deal being done before October the 31st. So just be aware that differentiation is that an extension is looking quite likely due to with market rating odds, but an actual deal is still seen as an out outside chance. So just to be aware of that. So I'm not expecting any further pound buying. That's the key thing for me. The key, unless we get some new news, unless we get a further breakthrough, or the EU say actually we think this deal can work, or the DUP starts saying we like this deal. We need some fresh catalyst now for the pound. Obviously at key support here, so it's not surprising we're finding some bids here. But I'm not, I'm certainly not confident to buy from these levels. Then we had the US-China trade deal. Now, the US-China trade deal has been broken down into two parts, into a phase 1 and to a phase 2. And what we've seen into the end of last week, we saw some dollar yen weakness again. Thursday, Friday, we saw dollar yen being bid up into that 108.50 level. This level just above this key resistance here and here, and we see resistance has been found here again at the 108.50 level. And the situation here now is that China came out today and they said, oh, we want to have further discussions. So we're seeing the yen being bid today. That was this candle here this morning. This strong yen buying was on the fact that actually China wants to have some more talks. The whole phase 1 deal is meant to be, signed out over 5 weeks. So China is suddenly saying we want to have more discussions. So this is why it was seen as a negative. And obviously when the market is concerned, we see yen buying. It's a safe haven currency. So that is the situation that we had there. There's obviously a phase 2 still to come. So it's very much wait and see with this US-China trade deal. And I want to see more information. I want to see more details. But the pair this pair I'm expecting for the next session, pound yen, I'm expecting to see sellers on the pound yen pair. Okay, so any retracements I'm expecting up to this level to 37, I'm expecting to see sellers on retracements, stops above recent highs. So for me, the pound yen makes sense as a pair to sell, because it's making, I expect to find sellers on the pound yen pair, because Brexit deal is less likely than the optimism of last week. The yen is being bid on these concerns revolving the US-China trade deal being not as developed as the market had hoped. So that's just, by way of quick introduction. These are two deals that we've really been waiting for, and both of them getting done at the end of last week, or are they done? That's really where the market is. It's trying to make a decision as to what it's going to do next and what's happening there. So there's plenty of risks still in the market. So neither of these deals are confidently, done through the post behind us. So that's why we're likely to still see some choppy markets as you get various headlines either confirming or denying the deal. So with Brexit, if you get positive news about a Brexit deal to be arranged before the 31st of October, we'll see pound strength. If it's looking more negative, we'll see pound weakness. But remember, the EU can always grant an extension. So if there's an extension to Brexit negotiations, we're expecting pound positive. So for Brexit, a deal, pound positive; an extension, pound positive; no deal, Brexit, pound negative. So that's the three outcomes that we're looking at the moment with Brexit. And obviously further down the line, if an extension is granted, then it's looking like a UK election. And a UK election at the moment would be pound negative, most likely at the moment. So it's with Boris Johnson's head in the polls, and he's more likely to lead Britain towards a no deal Brexit. So that's the way that's looking at the moment. US-China trade deal, the more positive noises that the US and China make towards, making a deal, signing off this phase 1 deal, that's going to be positive for risk. So expect to see yen weakness. But if there's concerns, China said we want more talks, we're not sure, this kind of rhetoric that's coming out, we're going to see yen strength. So that's what's to look at for these two deals as we go into the week. And don't forget, here's a little intermarket correlation for you. When you get stocks rising, commodities rising, bond yields rising, that's a risk on market. And that's when in a risk on market, you're going to see Australian dollar, New Zealand dollar strength, and Japanese yen, Swiss franc weakness. If you start getting stocks falling, commodities falling, bond yields falling, that's when we're in risk off. And we're in a risk off environment, we're going to see the we're going to see the yen and the Swiss franc appreciate, and we'll see the Australia dollar, New Zealand dollar fall. Okay, so that's a nice little intermarket correlation. So you can just take this, and that's why FX traders are always looking at the stock markets, because we're trying to ascertain risk, and by ascertaining risk we can see which currencies are more likely to move a certain direction. Okay, so now we're looking for the calendar ahead. So looking at the schedule, first up on the data slate is, here we go. First up on the data slate, we have the Australian dollar monetary policy meeting minutes from the Reserve Bank of Australia. Now, obviously, the first thing to remind ourselves is where are we at the moment with the Australian dollar, because you know, you've got to get the context to all these different market events. So the Australian dollar, that has found strength over the last few days on the positive developments of the US-China trade negotiation. That's why we've been seeing some Australian dollar strength. Okay. Now, if we get news that the phase 1 deal is going ahead, and then, you know, there's positive ground made on phase 2 deals, then we're going to see further Australian dollar strength. Okay. But at the moment, we're in a situation where there's concerns about the trade deals going through, and that's why we've been seeing this Australian dollar weakness this morning. So let's just look at the charts. We'll look at this again. So let's look at Australian dollar, Japanese yen, because that's a key risk currency pair. And we'll see that this pair has been selling off. There we go. So you can see, let's go down to the 15-minute chart. It's always a helpful chart to see. So you can see since the market opened, and we can see this sell-off has been going on because of concerns about China wanting more discussions with the US. This was when the news broke this morning around 9 o'clock. We had a quick, sudden sell-off, and now that's where we are at the market. The market's got this sentiment, this mood of concern that's still hanging around. Okay, so that's where we are. So in other words, the US-China trade deal is what's really moving the Australian dollar at the moment. If the trade deal is going well between US and China, we're seeing Australian dollar strength. If the deal is going badly between US and China, we're seeing Australian dollar weakness. So that's the kind of big picture to have in your mind. Now, the RBA, what we're looking at from the RBA is, will they have enough data to positively make a decision at their next rate meeting? So if we get a trend of good data or bad data, then we'll likely to see the RBA react to it. So that's what the market's waiting for, is some kind of trend to see what the RBA will do at their next rate decision. Now, the monetary policy meeting minutes, they are due out, and the way market will view these is they will view these monetary minutes to look for any clues as to what will be happening at the next rate meeting. So, for example, if they say something like, employment data is our top priority, and what's happening in employment will likely guide our next rate decisions, then that would tell the market participants, which data point to really focus on, and then that data point becomes more influential and has more impact than other data points. Okay, and as it happens, we know that that is a data point the RBA are looking at, and there is some labour data coming this week. We'll look at it as we go down the week. But the point is, they'll be looking at the monetary policy minutes to try to get fresh clues. Okay, so look on Tuesday in the morning after these minutes have come out, and look for us, read some analysts. What are they saying? What clues was the market able to get? And that will, depending on how strong or weak those clues are, we'll see some movement in the Australian dollar. But remember, the Australian dollar is being moved mainly by trade news between US and China. So you just got to get that straight. Next, October the 15th, Bank of England's Governor Mark Carney speaking on Tuesday, not expecting anything there at all because the pound is being moved around by Brexit-related concerns. So average earnings, which have been quite strong for quite some time, claimant count change and unemployment rate, not expecting much movement on this data at all. If there's a spike up or down, then the main Brexit narrative will take control of the pound. The only caveat to that is if you get, some negative data that's found to be Brexit related. Okay, so that's the sort of thing that might move the pound a little bit. But again, Brexit concern is the main issue. Remember, Michael Saunders came out and spoke a couple of weeks ago, and he was talking about, there may need to be a Bank of England rate cut sooner than the market's expecting, and the pound sold off quite quickly on that. So just look out for any hints from Bank of England's Governor Carney on the next path of rate cuts, because if he says something very dovish, that will move the pound as well. So that's what to look for him. Then the next really interesting, obviously you've got some Fed board members speaking, George and Bullard. You have to watch out for these Fed speak, because what's going on with the US dollar at the moment is the market is thinking and trying to work out, will the Federal Reserve cut rates at the end of this month on October the 31st? So any Fed speak that makes it seem that they will cut interest rates, particularly you want to look for, you want to look for hawkish members to speak to, if hawkish Fed members say something dovish, then, that gives us the strongest clue. So let me explain what I mean. So George is a hawk. So if we get George saying something dovish, then that would move the dollar. So if we get, Esther George, if they say, okay, we think a rate cut might be appropriate, then that would move the dollar quickly, because it would be a hawkish board member suddenly turning dovish. Now, Bullard is a dovish board member. So you expect a dove to say dovish things. Okay, so of these two Fed speakers, the one to look for is George. If we get George saying something negative, then that is going to be the most interesting, opportunity potentially there for the US dollar. Now we then have CPI data for New Zealand. Now the Reserve Bank of New Zealand cut interest rates twice. A 50 basis point surprise cut was their last rate movement. And if we see, so the market's looking, was that enough? That's big. Was it enough? If we see like a big miss in CPI data, then we'll see some sellers entering the New Zealand dollar pair. So a big miss here will result in some New Zealand dollar weakness as sellers anticipate a further rate cut to come. Okay, so that's what's going to be looking at for this CPI data. Be aware of that. You don't get CPI data out a lot for New Zealand, so when it does come, it tends to have some swing in price. So be aware of that move coming. Okay. Now, pound CPI, not expecting much for there, not expecting much for Euro CPI, though deflation data has been depressed out of Europe. Canadian dollar CPI, that's worth looking at. There was some very strong data out of Canada last Friday, some really good employment data. So the market's trying to make its mind up with the Canadian dollar. The Bank of Canada is the only central bank, the only major central bank rather, that hasn't adopted an explicit dovish bias. And the market is kind of waiting for a reason to sell the Canadian dollar. So is this going to be the reason to sell the Canadian dollar? If you get a weak CPI data on Wednesday, minus 0.4, no, minus 0.5, minus 0.6, then we're going to see some quick and heavy selling of the Canadian dollar. Okay, so look at that. The market wants to sell Canadian dollar, and it's looking for a reason to sell it. So that's potentially a reason that could happen there. The US dollar data, we've already mentioned that. If we get a run of strong data, then that is going to, you know, make chances of a rate cut less likely at the end of the month. So just you got to factor that retail sales into that wider picture. And we've had a run of bad data out of the US. Will this carry on? You know, that's the question that we're going to be asking. Then Bank of England Governor Carney speaking again, not expecting him to say anything, you know, important or market moving rather. And we've got Deputy Governor De Bell speaking on Wednesday, so that's to be aware of. Now this is interesting, Australian dollar employment data. So the RBA have said that they consider labour data as important. Okay, so this will be an important data point. Now, the thing to be aware of with the employment change is there's full-time jobs and there's part-time jobs. So the most important metric is full-time jobs. So for example, say there was like a boost of like 30,000 jobs versus the 15.3 thousand expected, but you know 28,000 of those jobs was part-time. That would have a less impact than if it was, you know, a 30,000 job increase and you know 30,000 of those jobs were full-time. So you've got to look at the full-time, part-time split on that data. But if you get some good data out on the Australian dollar, that would be supportive of the Australian dollar. But remember, we've got the China-US trade concern going on at the same time. So ideally, what you'd want both of these going in the right direction. So say you got good data for Australia and you got good news for the US-China trade deal, then you'd see some Australian dollar strength. So that would be, you'd expect to find buyers on pullbacks of the Australian dollar in that kind of scenario. So just to be aware of that, and obviously the unemployment rate as well. The lower the unemployment rate, the better. Okay, so the lower that number is, the better. Pound retail sales on Thursday, again, nothing particularly market moving. It's all Brexit related. Fully fed manufacturing index. Manufacturing obviously has a focus with the US dollar, especially after the ISM manufacturing data was like an 11-year low. So manufacturing will be in focus, as it is everywhere, because of the growth concerns between US and China affecting the whole world. So if we see US slowing down manufacturing, that's going to raise concerns, and then that in turn is going to raise expectations of a Fed rate cut at the end of October. But what you've got to remember with the US dollar as well is how optimistic are people on the US-China trade deal, because just having the trade deal signed before the next rate meeting might be enough of an excuse or a reason for the Federal Reserve to keep rates unchanged. Okay, so that's just another factor to be aware of. Now, going into the end of the week, an important metric is coming out, and that's China's GDP. Okay, now China's GDP has been very, very high. Let me just show you how high it's been. Right, okay. You can see this, look, GDP for China has been in from about 2004 through to 2010. For 6 years, you've got double-digit GDP growth. Okay. Now, GDP has been, as a percentage, falling since around, 2012. We've slowly seen GDP falling. Now, the question is GDP going to go underneath 6% for the next reading in October, right? The last time it was, so look here, so the last time it was 6.1% was in 2009, which is the heart of the financial crisis. So what the market is concerned about is this: do the tariffs between US and China, are they slowing down the manufacturing of US and China? And if Chinese and US GDP is slowing down, that affects the whole world. It's because US and China, between the two of them, make up 40% of the entire world's GDP. So you can see why the US-China trade talks have so much impact on the markets, because it's literally affects just under half the world's entire GDP. So if the US and China are struggling, having a trade war, it's not just US and China are affected, it affects the whole world. It's like if there was a big factory in a town and the big factory is doing well, all the people in the village or the town are doing well because the factory is helping to support the town. In one sense, in a very similar way, US and China, between the two of them, are huge economies which are supporting many countries around the whole world. Okay, so the way this GDP data fits in is, okay, how are China doing? If their GDP falls under 6%, right, the market is going to get concerned, because the market is going to say, oh, the trade tariffs and trade wars between US and China has affected Chinese GDP, it's affected its growth, and we're going to see a fallout across the whole world as these two huge world economies slow down as they argue and fight with each other, and it's going to slow global growth down. Okay, so that's the context in which China's GDP will be viewed. So obviously, if it's a beat, if it's 6.3 or 6.4, something up, that would inject a lot of optimism into the market. So say we've got the phase one trade deal working, and then say that's all going good, and China have, by Friday, have said, yeah, we wanted a discussion, we know what we're doing now, we're optimistic about the future. Then you get a good GDP data, then risk will be really on. You'll see stocks and equities rise in the short term, and you'll see Australian dollar and New Zealand dollar rise. So that's what we were. But conversely, if trade negotiations sour, and then we see some really negative GDP data here out for the Chinese yuan, then we're going to see the opposite. We'll see stocks, equities fall, and we'll see the Australian dollar fall. Remember, the Australian dollar is traded as a proxy for the Chinese yuan, and the reason that is because Australia's GDP, about 30% of Australia's GDP comes from China. So in a very, very straightforward relationship, what's good for China is good for the Australian dollar. What's bad for China is bad for the Australian dollar. So expect Australian dollar, Japanese yen pair to be probably the most, or certainly a very responsive pair to this data, okay? Because you've got it paired with yen, which is a key risk currency. And because of the context between US and China, this is being viewed in the context of the trade war, trade tariffs. So you obviously also got to factor in where by Friday we're at with trade talks, okay? Because if trade talks are going well and the market's optimistic, then it can take a little bit more of a dip here, okay? But if it's the opposite, if it's pessimistic or not looking good, and then that dips, then the market's going to be more risk sensitive. I hope that makes sense. That is the key market events that are scheduled. Obviously, the things to look out for this week: Brexit headlines, US-China trade headlines. Anything on these two deals are going to be particularly market moving. And don't forget, we have next week, we have the Tuesday rather, we have a workshop. We'll be looking in detail at the currency pair or pairs that I'm looking at trading tomorrow. We'll just go through the rationale and show you guys, how that works and what I'm looking at. I also just want to show you one quick thing here. With you in a second. Oh yeah, that's it. Just move across my screen. Now I wanted to show you this, this little trading. Don't forget we offer one-to-one trading here. So if you go to this website here, hycm.co.uk/en/Henriette/coaching, then you'll find my webpage here, and you'll find information about getting one-to-one trading advice from different people here. So do jump onto this website if you'd like some information about how to trade, get some trading advice, and not trading advice, rather some trading coaching. These are the deposits to the account, and these are the account coaching sessions that are available. So if you've got any more information, just come along tomorrow. We do questions and answers tomorrow. So if there's any specific currency pairs that you're looking at trading, bring them along tomorrow. Put them in the chat panel, the question panel, and we can go through them. I can tell you what I'm thinking about those currency pairs, and hopefully we'll have a really beneficial session. Okay, guys, thank you very much for today. Thank you, Lola, Ignatius, Sheik, Chris. Thank you, guys, Muller, and all the other guys come before. Thank you very much, and I look forward to speaking to you tomorrow. Take care now. Bye.